Picture this: your hard-earned paycheck shrinks before it hits your bank account, eaten up by taxes. Meanwhile, billionaires stash billions in untouchable vaults, legally dodging the system.
Welcome to Question Everything, where we challenge the status quo and dive deep into truths no one else dares to. Get ready to question everything you know.
How do they do it? Why are you paying the price? Let's uncover the billionaire's secret and expose why America's tax system lets the ultra-wealthy win while you lose. The US tax code is a nightmare, sprawling over millions of words, more convoluted than ever. For the average American, filing taxes takes hours of headaches and costs around $300 in software or professional help. One mistake, and you're facing an IRS audit, adding fines and frustration to your day. In 2025, federal income tax rates start at 10% for single filers earning up to $11,925, rising to 12% up to $48,475, 22% up to $103,350. 24% up to $195,300, 32% up to $248,450, 35% up to $622,050, and 37% above that. Effective rates? Most people pay around 11 to 14%, with federal income taxes generating trillions, about half of government revenue. This complexity isn't just annoying, it's unjust. It favors those who can afford experts to exploit loopholes, while you're left overpaying or missing deductions, widening the gap between the rich and everyone else. Contrast this with Estonia's sleek system. In 2025, they use a flat 22% personal income tax with no brackets to navigate. Filing takes minutes via an automatic digital platform that pulls data from employers and banks, cutting errors and time. Estonia's approach saves billions in administrative costs and boosts compliance. Imagine if America adopted this digital system, you'd get refunds quickly, freeing up time instead of drowning in forms. In Denmark, taxes are high, up to 42% on higher share income in 2025, but they deliver value. Funds support free healthcare, education, and parental leave, so citizens see direct benefits without US-style out-of-pocket costs. Denmark's progressive system ensures the wealthy pay more, and everyone gets universal coverage. In the US, individual taxes account for about 50% of revenue, with payroll taxes at 30% funding social programs that often fall short. How these giants are saving taxes? Now, the real scandal: how billionaires and tech giants dodge taxes. The Silicon Six, Amazon, Apple, Alphabet, Google, Meta, Facebook, Microsoft, and Netflix, have avoided nearly $278 billion in US taxes over the past decade through aggressive strategies. Multinationals shift $1.42 trillion in profits to tax havens yearly, dodging billions in US taxes. The corporate rate is 21%, but effective rates plummet due to offshore tactics. Apple uses profit shifting, parking intellectual property in low-tax countries like Ireland, attributing massive profits there and paying minimal taxes, saving billions. Amazon leverages stock-based compensation deductions, where executive stock pay slashes taxable income, resulting in effective rates as low as 1–2%. They've paid just $5.9 billion in income taxes this decade. Google, Alphabet, exploits foreign-derived intangible income (FDI) deductions from the 2017 tax law, claiming over $11 billion in benefits by exporting IP-related income at reduced rates. Microsoft uses transfer pricing, overcharging high-tax subsidiaries for services from low-tax ones, achieving a 20.4% effective rate while avoiding billions. They also secure tax breaks for data centers, exempting billions in state property and sales taxes. These strategies include hybrid entities that exploit tax treatment mismatches between countries, corporate inversions to relocate headquarters, and amplified R&D credits via offshore structures. Netflix, with a 14.7% effective rate, bundles content rights in tax havens to minimize US taxable income. These tactics starve public funds while boosting shareholder wealth. This avoidance drives inequality. In Q1 2025, the top 10% own nearly two-thirds of U.S. wealth, with the top 1% holding about 30% and paying roughly 40% of income taxes, but far less proportionally due to loopholes. Middle-class Americans bear the brunt, payroll taxes at 6.2% for Social Security cap at $176,100 in 2025, so billionaires pay nothing beyond that on their fortunes, making it a regressive system that hits workers harder. Global comparison. Australia offers a better model. Their 2025 rates start at 0% up to $18,200, then 16% to $45,000, 30% to $135,000, 37% to $190,000, and 45% above that. Simple brackets, automatic deductions, and universal healthcare make it fairer. Filing in Australia is easy with pre-filled tax office apps. Benefits like student loan relief are standard, unlike America's patchwork system where you struggle for every credit. Canada strikes a balance too. Federal rates in 2025 are 14.5% up to $57,375, 20.5% to $114,750, 26% to $177,882, 29% to $253,414, and 33% above that. Streamlined filing and universal healthcare ensure taxes benefit everyone equally. Canada's credits for low earners ease the burden, and their system curbs avoidance better than the US, where global minimum tax agreements falter, letting multinationals slip through. This injustice isn't inevitable, it's designed. Change can happen at every level. Individuals should educate themselves on tax basics, use free IRS tools like Direct File to maximize returns and avoid overpaying. Corporations must adopt ethical tax practices, commit to transparent reporting, avoid aggressive offshore schemes, and pay fair shares voluntarily. Tech giants should lead, supporting reforms like full country-by-country reporting to expose profit shifting and rebuild trust. The government must enact worldwide combined reporting, WWCR, to tax multinationals on global profits, preventing haven shifts. Raising the corporate rate to 28%, fully implementing the 15% global minimum tax via OECD pacts, and increasing IRS funding for audits on big firms while closing loopholes like FDI abuses and data center breaks would ensure revenue for public goods. If the $150 billion evaded annually by America's millionaires and billionaires were collected, it could exceed the federal education budget of $83 billion, improving schools, teacher salaries, and access to higher education for over 50 million students. Collecting the $77 billion lost yearly from corporate profit shifting, applying the 21% rate to $369 billion shifted, could fund healthcare expansions, potentially ensuring 28 million uninsured Americans and reducing out-of-pocket costs driving 530,000 medical bankruptcies annually. This $200 billion plus in revenue could repair 45,000 structurally deficient bridges, create 1.5 million jobs, and boost economic mobility and safety for everyday Americans nationwide. Final remarks. Success shouldn't be penalized, but these giants shouldn't get a free pass on taxes while many Americans struggle with basic needs. There's hope on the horizon. Global pacts like the 15% minimum tax are gaining traction, despite US delays. Imagine an America with Estonia's efficiency, Denmark's benefits, and no billionaire escapes. Reforms could reduce inequality, fund better schools and healthcare, and restore trust. Every hardworking American deserves a system where giants benefiting the most face scrutiny and pay taxes based on what America needs to improve the quality of life. Your actions today can pave the way. Let's turn this secret into a system that works for all, not just the ultra-wealthy.
Your opinion is what helps us expand our knowledge. Please share your thoughts on the question we asked and let us know what we should investigate next. Don't forget to subscribe to Question Everything and hit the bell. Stay curious and keep questioning.